to the exchange. Netflix's blowout numbers earlier this week have the bullish calls still rolling in, and that was Tuesday night. Bernstein is the latest, upgrading them to outperform, hiking the price target to $1,200, saying they believe another year of double-digit subscriber growth is achievable. But that target looks downright conservative compared with Rosenblatt's Barton Crockett. We talked about this yesterday. His price target is almost $1,500 now. And this week's report was the last one in which Netflix will disclose subscriber count, or they say they'll do it when they hit major milestones, which might be every quarter at this point. So what are the new metrics to watch? Can they keep growing? Joining me now is MNTN CEO Mark Douglas, because, Mark, you were an early, I guess, what do you say, client? You have a relationship with Netflix. Maybe you can give us some perspective here. How do they do it? How are they going to keep doing it?
Yeah, well, I think when I think of Netflix, what I think of is they have three big advantages. So one is they're the first place most consumers go to when they want to watch TV, period. And that's why they're able to take like a Jake Paul fight and Mike Tyson fight and turn it into Super Bowl level numbers, is because everyone is going there to decide what they want to watch. And if that's what's on, that's what they're going to watch. And then they also have like this, they're so profitable now, and they can create more content, and more content drives new subscribers. This is the last thing I think is what's most important. Those new subscribers, more than half of them are signing up for ad-supported services, and that is barely monetized. So it's the same way they had like this password backlog of revenue, they're building this advertising backlog of revenue, and I think their stock is just going to keep soaring for literally.
They're over a $400 billion market cap. They're going to spend $18 billion, I think the number is, on content next year. And Paramount's entire market cap is now $9 billion. So if you look at Paramount, if you look at WBD, if you look, I mean, the biggest of the traditional media companies are Disney and Comcast, obviously. But for the smaller ones, for the smaller streaming players, how do they achieve scale, size up, and try to now make inroads against this juggernaut?
Well, I think there's just going to have to be consolidation. It's going to be the way they achieve. It's not so much scale. It's achieving a very unique audience, having content that people like, they just know why they want to go to you and watch your content. And we've talked about this in the past. I mean, a lot of that is owned by like Disney, ESPN Sports, that kind of association. But you have to be unique to survive. If you're not unique, you're going to get acquired. Absolutely going to happen.
And Disney is certainly unique. They're about, almost a $200 billion market cap, I think. I don't know if they have any interest in rolling up the rest of the traditional media space, right?
I think Disney, Netflix looks like they're not just looks. I think they're going to soar for years. I think the stock seems expensive, but I actually think given their growth potential, it's not expensive. I think Disney is putting their foot to the pedal right now, and they are coming on strong. They have huge advantages in live sports. They're really good at it. And I think this is the year of live sports and streaming. Like, that is the 1, 2, and 3 topic when you talk to these streaming networks. What they want to talk about is live sports over streaming. So Disney's going to be another stock that, if me personally, I'd be buying right now.
You'd be buying Disney, as you said, a little cautious on the Netflix valuation. But to Bernstein's point, they said if someone had put $1,000 price target on Netflix a year ago, people would have laughed at them. The most bullish estimate for 2024 and 2025 was nowhere near enough to justify that, and Netflix met and exceeded that, which is just remarkable. So sports now, they're just starting to get into. Yes, sports rights are more expensive, but this looks like the direction this is all going. They're going to be able to afford it. Or maybe it's Amazon. Look, they had 4% share last month. YouTube had a record high, 11%. Those are a couple $1 trillion market cap companies that can afford those sports rights.
Yeah. Also, remember with Netflix, this is how it goes back to that first thing. Because they're the first place you go to watch television for most consumers, you can turn something like WWE into a big sport. You don't have to go to the NBA. You don't necessarily have to go to the NFL. So I think they're taking a smart strategy of kind of, dabbling in NFL, but then finding things people traditionally wouldn't have watched, but
making them stars, little by little, poco a poco. Mark, thanks. Appreciate it. As always, big week for Netflix. Mark Douglas of Mountain. I don't know why I always say Martin. Thanks for watching The Exchange.